You can grab your seats. We're ready for our gas tanker panel. All right, we are going to hear if folks in the back of the room can either grab a seat or get out into that area in the coffee room to continue your conversation. That would be fantastic. Okay. So it's a pleasure to introduce a first-time Marine Money speaker. True, Mohith?
Okay.
Okay, first time. So let's be nice to him. Mohith Velamala, oil and shipping specialist at Bloomberg, who's going to moderate our gas tanker panel discussion. Thanks, Mohith.
Hello, good morning, everyone. Thank you so much for joining the gas tanker panel. Today, I have like 4 leaders of the gas tanker business here with me. First, I'm going to start off with the LPG tankers. Through my far left, it's Peter Zacho, CEO of Navigator Gas, Kristian Sørensen, CEO of BW LPG. And now moving on to the LNG side of the business, we have CFO of Cool Company Management, John Booth, and Knut from the CFO of Flex LNG. Sorry about that. So we heard a lot about like the crude tankers and then following by the product tankers, and I think it's a nice place to talk about the LPG and LNG side of the business as well. US plays a very big role in trade for both LPG and LNG. But right now, like we have to talk about the geopolitics. I think I'm going to start off with you, Knut. So what's the main thing that you're thinking about in terms of impacts, specifically for the LNG tankers for the Iran and Israel conflict?
Yeah, it's a good question, because when we arrived here, then there was an ongoing war in Iran. All questions about the closure of the Strait of Hormuz. Now we're reading more that Iran is ready for peace talks, so maybe the topic won't be that relevant anymore. But if you look at it from Iran's perspective and others in the region, they have no interest in blocking the Strait of Hormuz. But if it should happen, obviously 20% of the LNG volumes are coming out of that region. That would have a massive effect on natural gas prices, which are already high. At the same time, Qatar has a big fleet, and then the big question would be, what would happen? Will that be released into the international trade or not? Historically, Qatar don't do relets. So, but for now, it's good news that Iran is ready for peace talks, and maybe we can reduce the tensions, and trade will follow.
Yeah, I think like 2 weeks ago, so it was ready for peace talks as well. But like, is there anything you would see differently, or anything to add on that?
So, can you hear me well? Yeah. What I would add to that is, if you go back to the Iranian-Iraq war back in the 90s and the Gulf War, the Strait of Hormuz was never really closed, probably mainly driven by an international coalition, a military presence there. So 20% of the oil flow and 20% of the LNG flow, it is too big to fail. It is too big for, as we heard on the tanker panel as well. I think the world can't afford it. So that's my take, also based on a bit of history.
Yeah. I think it's more from the supply side, like a Qatar story for like LNG, and I want to get like your perspectives on like the LPG market as well, specifically in terms of like volumes. And there was like a lot of mention about like insurance premiums in the earlier talks as well. So maybe if like from the LPG market perspective, like is there anything that you can say about like insurance premiums, or even in terms of the volumes that are flowing out right now out of Strait of Hormuz and just like in general?
Maybe I can start out by saying that we are pretty active in transporting LPG through the Strait of Hormuz, and we have not seen the war risk premiums coming up. So it's been pretty stable. We've also seen that ships have not been targeted. So we monitor this very, very closely, but so far it stays open, and we continue trading in and out.
Okay.
Yeah, and the same for the VLGCs. It's uninterrupted, but there is definitely a rush to secure cargoes and ships out of the Middle East. And also we do see that there is increased interest in securing cargoes and ships out of the US as an alternative to what eventually may happen or may not happen in the Middle East. So our VLGC market is kind of very much in the midst of being, and also being colored by the geopolitical tension at the moment.
Okay, because I think recently we saw a lot of like rerouting happening, like especially from the tariffs kind of discussion, where there was like a lot of demand for like Middle Eastern cargoes, like especially LPG, in favor of like U.S. cargoes as well. So has that already? We've seen like some of the redistribution like happening. Has that stopped now with the pause on tariffs, or where do we see that swapping cargoes for LPG?
Yeah, so if we rewind and look back to April when the Chinese introduced the retaliatory tariffs on US-sourced LPG, obviously that was had a major impact on our markets, because you suddenly have the biggest exporter of LPG being the US, and the biggest importer is not trading any longer with each other. And that trade basically came to a halt within 2-3 days. But what's important to keep in mind when these things happen is that LPG, being a byproduct of crude oil and natural gas production, which is not consumed domestically in the States or in the Middle East, it has to be exported and cleared in the international markets. Otherwise, you will reach a tank top situation and the shutdown of the crude oil and natural gas production, which will never happen. So what happened back in April was that the LPG flow from the US, which was then shut off from the imports or the sales into China, they very quickly found another home in Asia outside China. So it's a very, very dynamic market. And that's also what we're seeing today, like I said, with geopolitical tension. The LPG flow continues. It's a very dynamic market. The VLGC market is reacting very quickly to these changes. And today, we are trading in the spot market around $60,000 per day, and maybe even a bit higher out of the Middle East, which is obviously healthy values and levels for the VLGCs.
Okay, I think just like keeping on the tariffs topic a little bit, I think, Matt, I want to get you here because like I think your company does a lot of ethane trade as well, which I think like only US does in terms of the export market. So it's slightly a bit more complicated with like ethane. It's not just tariffs. Like, do you want to just like explain a little bit of what that is?
Yeah, in early May, when the tariffs were implemented, 145, 125%, of course that stopped everything for a very brief moment, but fortunately they went away and we were, we're off the hook. That was great. 23rd of May, we saw the requirement for export licenses for export of ethane from US to China. So I think there was quite a bit of confusion in the industry about what that meant, what's the process for it. We know that Enterprise applied for an export license and they got rejected. But then came the negotiations in London. I think it was the 7th, 8th of June, and it seemed to be successful. And there has been a lot of, you could say, news flow coming out about it. We know that Enterprise has again applied for an export license, and we're waiting to hear the response. But I think that being said, this is a bargaining chip. This is the US putting pressure on China to go through those trade negotiations and finding a deal. The US needs to export the ethane. 50% of the exports go to China. And as Kristian just explained, it can't be stored, it can't be kept, so it has to move. For China, they import all of their ethane from the US, so there's a strong need for both China and for US to keep this trade open. It's a bargaining chip, and it's going to go away relatively soon.
And do you, because I know it's like slightly less flexible, where there's like probably a lot more like LPG buyers and like ethane buyers, would that like impact any of the volumes coming out of the US right now, like for ethane specifically?
Sorry, could you say that again?
So very specifically for ethane, because now naturally we see like more LPG buyers like have like a lot of port infrastructure and a lot of places that LPG is used, and very less so for ethane. Do you see any disruptions in like the production and then exports from US based on ethane?
Yeah, no, I don't think that we'll be seeing disruptions. There'll be short-term upheavals, but by and large, we'll see the product moving, and we see the growth being quite significant in the coming years.
Okay.
I think just to add a comment to that, I mean, when you speak with the big U.S. terminal companies, the exporters, you know, they are moving forward as planned with all their billion-dollar investments, and I think for shipping, that's a positive sign, both for the ethane and of course for the LPG as well.
Yeah, more committed volumes coming out of the terminals, yeah, for sure. I think we discussed like tariffs and like a little bit on the export licenses as well. And maybe on the LNG side, like just switching on like similar topics. I know there was like USTR and the relation with like the Chinese ships as well. And I think there's some changes and a lot of activity in that market. Maybe if you can, John, like speak about like the LNG market in particular.
Yeah, so as you probably have all read by now, is that the LNG carriers are exempted for the first 3 years. And then subsequently, as of 2029 or 2030, there is a requirement for all export, for 1% of the export to be carried with US carriers, and that increases to like 15% by 2047. So the first 3 years we are exempted. So that's good for LNG carriers. Recently there was an amendment on June 6. That amendment basically removed the suspension of export licenses in the future for non-compliance, which is good. And there is further questions and requests for comments on who provides the data, who is responsible for the cost, etc., whether it's the operator, the owner, the exporter. So I would say on balance it was a good amendment on June 6. And then moving to sale and leasebacks, that is, for now, they're included in the equation. But to me, it's unclear whether that was intentionally included or unintentionally. I've seen letters being sent to the USTR because, you know, at the end of the day, a sale and leaseback owner is the Chinese sale and leaseback companies are the legal owner. They're not the operator of the ship. They're not the economic owner of the ship. So for now, sale and leasebacks are included, but I think maybe more changes to be expected. At least I hope so.
Okay. Maybe anything to add on that, because I know China is playing a bigger role in LNG shipbuilding as well, and maybe you can also touch upon on the LNG order book while we are at that. Yeah.
Yeah, on the USTR topic, it's for the LNG side, either if it's Chinese leases or Chinese built, it's exempted for now. I think it's more important to look also what the charters are looking at. Preferably we are looking into long-term contracts, and then it's all about what the desires are of the charters. And we are in a very conservative industry, and charters takes the ships for long-term commitments, and they're probably now more skeptical on China risk, particularly more the Western charters. So even though that there are exemptions by regulations, it will be interesting to see how this will develop further. But the Chinese leasing industry and the financial markets has been very important for the LNG sector. It's a massive order book. There are a lot of expensive ships. New building today is probably $252 million. So there's a lot of capital to be raised, and until now, probably we've been needing the Chinese leases. When we go to the order book, I heard the other panels, any shipping segment, they are either bragging that there's a low order book, and then there are some segments with high order book, and then there's all explaining why you shouldn't be worried. Remember that probably 93% of the order book is committed for long-term contracts. These are 10-year contracts which they are on charter for purpose. They are to lift volumes. And the initial part of it was a fleet renewal of the old steam tanker fleet. Second part is to lift the new volumes, in particular from the US and also the Qatar fleet. So the order book will be absorbed. But the projects in the US has been delayed, partly by Biden's moratorium. Now you see also the tariffs, in particular on steel, that the cost of the terminals may be higher. Some, like the Woodside Louisiana LNG, sort of historically is more of an aggressive way of taking FID with limited offtake agreements. Partly there are speculations that they did an early FID to start commencing of the construction and at lower cost. But I just see that now with all these FIDs looking to be taken, they will absorb the new building order book. It will probably also trigger a new wave of new buildings once charterers get allocated the volumes and have more certainty of what their demand for ships are in the future. So that will keep new building prices probably high. And with this China issue, let's see if the container ships are rushing back to the Korean yards. And then there will be a fight between LNG and maybe even LPG, and that will keep values high.
So it's not really a case of overbuilding yet?
Well, because of the delay of the startup of the volumes, there are too many ships available today.
Yeah.
But if you look at the number of ships that are idling, or basically taking out of service, it's now probably more than 60 to 70 ships. That includes some tri-fuels as well. But a high number, there are more than 40 steam tankers now idling. They have barely any revenue, there's no demand for it. So it's more surprising that you haven't seen scrapping picking up. But we need to find a steam tanker owner and ask them what they're thinking about it.
And maybe I can add some numbers to this. Today we're liquefying roughly 400 million tons per annum. If you read most analyst reports, we're going to add in the time frame from 25 to 2030 around 200 million tons per annum. And that excludes Arctic LNG 2, Mozambique, and Qatar, one of the Qatar fields, North Field 2. So that gets you to ultimately 600 million tons per annum, and that doesn't even include non-FID projects, right? You need roughly 1.82 ships per million tons per annum. So do your math. You need, roughly 900, more even, 1,000 vessels over a 5-6 year period. Today, we have 680 vessels on the water, of which 180 active steamboats. So if they leave the market, it's 500 plus your 250 in new builds, or probably even a bit more. So that gets you to 750. So that means somewhere in that time frame, you're going to be short shipping. I'm not going to give an exact prediction here when that's going to be, but it's probably sooner than later.
Yeah, I think definitely a strong support, fundamental supply coming out of the US and Qatar over the next few years. Maybe just like switching gears a little bit on the LPG side, just to talk about like the medium term, like supply outlook and export potential coming out. Mats, maybe if you can start us off with like LPG side.
Yeah, it's great to hear the confirmation that natural gas production is going to grow and it's going to flow. Because when you produce natural gas, you also get the natural gas liquids produced at the same time. Some of it is propane, 42% is ethane, and then you get some butane and some other stuff as well. We've seen in the past that production in the US has grown. I think it's probably around 50-60% over the last 6 years. And some of it is being absorbed in the US, it's used in the US, but lots of it has to go abroad. And when the production grows, then the export grows with a multiplier. So over the past 6 years, with the 50-60% growth in production, you'll see LPG growth of 100% and ethane growth of 200% when it comes to the export volumes. And we're going to see that picture also going forward with growing natural gas production. You'll see more natural gas liquids, and you'll see more exports coming our way. And the good news is that the infrastructure is being built out. As an example, you could see that Enterprise, they are building their ethylene infrastructure. They have 25 producers connected through the pipelines. They have 4 caverns. They have 270 miles of pipelines. And we've just together, in a joint venture, expanded our export terminal by 50%. So it means that the whole upstream infrastructure is being built out at the same time. So these volumes are going to flow. And the great news, too, is that the global demand will be there. If you look at the end product, which is plastics for ethylene and ethane, in most situations, the demand is probably going to grow in the neighborhood of 50% over the next 6-7 years. So it's a very, very robust demand picture that we are facing.
Yeah, I think like the medium term, both on the supply side and the demand side, there's more. I think, Kristian, like I want to let you speak on that and maybe expand on the order books as well, like current in the LPG market.
Sorry, I couldn't hear you. You said?
Yeah, I think if you can just like talk about like the order book for the LPG markets, and I think there was also an acquisition of vessels as well that you did like very recently. Yeah.
So, kind of echoing what you're saying, of course, there is tremendous growth of LPG, which is going to be exported from the States from now up to 2030. And I think it's also important to keep in mind that there is also additional volumes coming from the Middle East, especially on the back of the Qatari LNG expansion that is soon starting to ramp up. So what we do have in our market is, of course, we have good visibility the next 12 months on the order book and the new building deliveries. It's like a dozen or so into a fleet of 410 ships globally, thereabout today. In 2027, I would say it's a sizable fleet which is going to be phased in. But with the volumes that we anticipate will be coming on stream from the US as well as from the Middle East in the years from 26, 27, 28 and up to 2030, there is definitely a very good chance that these new ships can be absorbed very well into the market. And I think another another driver for our market, which is important to keep in mind, is the Panama Canal. The capacity in the Panama Canal is fixed at basically 10 transits in total per day in the Neo-Panama locks, with more ships coming into the global fleet on the container side, ethane carriers, LPG vessels competing for these transit slots. It will also be quite likely, we think, more congestion in the Panama Canal, which will push more VLGCs to sail the longer route via South Africa on its way to and from the US and Asia. And that's a very, very strong driver in our markets. And I think combining this with the volume growth, and who knows, maybe there will also be some ammonia coming on stream from these blue ammonia projects, which are still in the making here in the States. And some of them, some of the VLGCs or VLACs are probably ending up in that trade too. We believe that if you look at the medium term for our markets, the fundamentals are pretty good.
Okay. And I think just to look at the long-term fundamentals, which I think it looks very strong on the supply side of like both export cargoes. You also mentioned a bit on demand for these cargoes in these countries. Is there anything on the LNG side that concerns you with like demand side of things? And then I think in the near term, people are looking at China market, like LNG imports going down. But do you expect it to like a short-term thing or structurally?
Yeah, I think it's important to see that in Europe, for example, the natural gas prices are way too high. and that's been demand destructive. So this week, when you see, well, the bombings in Iran, and people look at the natural gas prices and believe that that's the reason for the spike of it. Another more likely factor was that there was an unplanned outage of a terminal in Norway. And that tells how tight the gas market is today. That a small terminal outage can push prices. And you see that at these levels, demand in Asia are down. There are other factors for why US volumes are not moving to China today. But with all these new export volumes out of US will hopefully also bring down prices. And in any commodity sector, low prices generates demand. And then you will see India increasing their demand. You will also see new, more emerging markets in Southeast Asia. So it's all about the price. And new volumes, more volumes, will bring prices down, and then demand will follow. And that's also then, hopefully, you can start to see that the arbitrage is opening up to Asia, and then you have longer sailing distances that will generate more ton miles, and then we're all happy.
Cool. I think there's like some things that I want to get on, like investment decisions around this like climate of tariffs, and more importantly, how quickly things change, whether it's like shipbuilding, quickly USDR, it's like eased again, and then tariffs, then pause. So like more respectively for your companies, has there been like any investment decision changes, like specifically around this uncertainty? I think it's more open-ended. Yeah.
No, I don't think there's always been, when you're looking at the new building, if it's Korea or if it's China, most of the Chinese yards have now started to deliver their first ships, so they have also the learning curve and the quality required. Then there's also the difference between the yard prices. Obviously, with the USDR and more US-China trade war, you need to keep that in mind. But at these asset prices, at least for us, making a new building decision, that will require a minimum 10-year contract. And that means that you have a dialogue with your charterers on which kind of quality and yard the charterers would like to have. So if there are a new building delivery 2028, you're not doing that $250 million investment on a speculative basis.
Okay. Maybe on the LPG
Maybe
side.
for John. I don't know.
No, ideally not, for sure. I think what has happened in the market recently is, obviously, it's a very bad spot market still. It has had a little bit of a carryover effect to the term market as well. You know, not to the same extent, of course. So that makes companies like ourselves less likely to invest, right? Because the 10-year market is just not sufficient enough to make the returns. But once the spot market recovers, and then that will likely have a positive impact on the term market as well. But we do get, I'm sure it's the same for you. We do get quite some inbounds for new contracts from the charterers. So that's a good development.
Cool. Kristian, maybe.
Yeah. So I think after we concluded the Avance Gas transaction, which was very much kick-started here at Marine Money last year, very happy with that transaction. We have no further plans at the moment to invest in new buildings or any other assets. We're happy with the fleet that we have, and we want to spend some time to let the assets work and generate revenue for the company for a while. But what we have done is to take the foot off the accelerator on the planned import terminal in India that we were supposed to invest in. And that's due to the geopolitical tension and increased risk that we are currently seeing a project that we have decided to exit from. So I think that's a kind of a direct answer to your question, whether the investment decisions are changed since the geopolitical tension started to increase this year.
Yeah. And maybe Mats, if you could just like close us off.
I'll close us off, and I'll be fast. We were quick in raising cash when we saw things heating up in the early spring, so we refinanced and we tapped the bond market, so we have ample liquidity, and we're spending that on buying back our own shares. We've seen our shares drop, and that's a great opportunity to buy back shares at a really good price. So that's the main capital allocation on our side for the time being.
Cool. Thank you so much. That's all we have for this. Please give a round of applause for them panelists. Yeah, thank you so much.